Certain HOA special assessments are tax deductible for rental property owners. We'll cover the 3 types of assessments, how they're treated for taxes, and strategies to maximize your deductions. HOA special assessments are one-time fees charged by HOAs for specific projects or repairs. Examples include major repairs, capital improvements, and emergency repairs. These assessments go beyond regular monthly dues and can significantly impact your finances. Tax treatment depends on the purpose of the expense. Repairs and maintenance are immediately deductible. Capital improvements must be capitalized and depreciated. Mixed-purpose assessments require you to allocate costs between deductible and capitalized expenses. Accurate record-keeping is essential. Document the purpose of assessments, payment proof, and allocation details. Timing matters. Deductibility depends on when the payment is made. Capitalized improvements increase your property's basis, which impacts depreciation and capital gains. Understanding HOA assessments is crucial for maximizing tax benefits. Always seek professional advice for tax matters. OfferMarket is a rental property investing platform. If you're not already a member, we hope you'll accept this invitation to join us. Membership is free, and your benefits include access to off-market properties, private lending solutions, landlord insurance rate shopping, market insights, and community support. Join OfferMarket and grow your portfolio.